I want to talk to you right now about two major lessons that I have learned during the spring 2025 bear market. Let's look at how the bear market unfolded and talk about those oh so important lessons that I'm kicking myself about in hindsight, but boy, I've got them dialed in now for next time. Hey everybody, my name's Joe. I am a professional full-time trader with 29 years of trading experience. I opened my E-Trade account in 1996, back when online brokerages were brand new. Let's take a look at the NASDAQ. The S&P 500 chart looks quite similar. So I guess one of the essential flaws looking back on it was just getting lulled into complacency. We had a really nice trending bull market here from 2023 to 2025, where buying the dip was very much rewarded, right? However, in 2018, the Fed made a rate cut announcement, or lack thereof, it turned out, and did a question and answer session, and he pivoted. He did a 180-degree turn. For a couple years, he'd been saying everything's fine, inflation is transitory, yada, yada, yada. And then right here on December 18th, he said, things are not fine. Inflation is not transitory. It's very sticky. I'm not going to be cutting rates anytime soon. In fact, we might even have to raise rates. And boy, did that torpedo the market. We had a market here at all-time highs. And then on December 18th, we had this really nasty 4% down day, closing near the low of the day on big volume. That right there, I should have realized, okay, things have changed. And what I should have done was said, the trading climate has just gone from positive to negative. I'm not going to do any more trades to the long side until we see a nice base build out and a breakout to new highs. That would have saved 23% to the downside. So when there's a major pivot in trading climate, positive or negative, wake up and act upon it. In that case, like I said, I'd wait for a full base. And not only was there one shot across the bow, but there was actually two. What happened after this major negative Fed event is we went from a pretty nice trading climate for a few months to this wild, volatile base, whipsaw, choppy action, wide-ranging days, big sell volume. Things got more volatile. And then on January, I'm just checking to see what day that was. Okay, and then on January 27th, which is right here, we had an announcement, the likes of which we've never had before. For months, not a few years, the talk about AI was very much in vogue, and how we're going to need so many semiconductor chips, so forth, and all of the computer hardware stocks were ripping because of that, and the software stocks were ripping forth because of that. And then on January 27th, this DeepSeek, which actually came out a few weeks earlier, hit the news in a big way. This Chinese ChatGPT knockoff was proclaimed to the world, and supposedly it used, I don't remember the details, but it needed 90% less computing power. Now, whether that's true or to what degree is irrelevant. It scared the market. We were almost at all-time highs again, and then we had a terrible gap down almost 4%, closing down 3%, and then we had more volatility. So this was a 1-2 punch. The Fed pivots in terms of climate, and then DeepSeek, which created a tremendous amount of FUD, fear, uncertainty, and dread, which is still going on right now. And then we saw continued volatility, attempted accumulation here, crawled above the 50-day, and then we saw this, malformed cup here and a little bit of a handle, demand hammer accumulation there, and then the next day crashing down through the 50-day on above average volume. That was our clue. We should have been out of the market right here on December 18th, if not on December 27th, right here. If not, this was the day to get out. But this was actually the day to short. In hindsight, after all that negative news and all of this terrible, choppy volatility, it would have only taken 5th grade level logic skills to realize that this chart was going to break open to the downside. And we should have put on a big short right here when it closed near the lows of the day beneath the 50-day. And we could have capped our loss up there at the recent high. We could have put a 3% stop loss on a really large position, limited our loss potential, and then we would have had a great chance at a short. I actually did end up shorting the next day, right about here, but you can see I'm way off. I missed out on about 2% there, and I did go with an above average position, but not nearly as large as I should have. And then I took off, I sold it off twice. Second sell was fine, but then I should have added it back here. See this dead cat bounce? Got break through the 50-day on high volume, break through the 200-day, failed rally, rollover, filling the gap. I should have put those shares back on right there. What do we do now? I think in the absence of, now this is pure speculation, this is just my opinion. In the absence of new bad news, I really think that Donald Trump's tariff pause day here on April 9th, I suspect that is the bottom, and I do not think stocks will undercut that low. This would be at 15,270 for the NASDAQ. But if more negative news comes out, if more tariffs are raised or tensions between China and the U.S. get even worse, which would be hard to believe, but I suppose it could happen, then we might see the bottom knock out. So to review, and before we review one thing, I do have a Patreon membership program where I show my focus list and portfolio every weekend and do some weekday updates and so forth. There's a 7-day free trial on that, and there's a link in the description below if you are interested. So to recap, when there is a major news event that changes the trading climate, take action. Don't freeze like a deer in the headlights. When the Fed made that radical 180-degree hawkish turn, I should have taken action on that day, and instead was so lulled into complacency that I just froze. Secondly, if you get 2 major news events in a row changing the trading climate, then if you do not take action on that, you are a first-class moron, and I suppose I fit the bill on that one. In this case, the second negative major news event was that DeepSeek event on January 27th that brought all of that FUD into the market. And then, so I guess that's rule number 1, or lesson number 1, parts A and B. Then lesson number 2 is to be assertive and assertively pivot. You can make money in both directions, and just because a stock or index has been going up for years doesn't mean that you shouldn't pivot when the time comes. Like I said, I should have put on a big short here on February 21st. Instead, I put on a medium short a day later, took it off too early, etc. So I hope that was helpful for you. I really am going to be cognizant of that the next time the market, I'm going to be cognizant of, wow, this is getting a bit rambly here, of major news announcements that change the climate, good or bad. And then I'm going to be force myself to pivot and put on a big long or a big short when the charts dictate. Hope that was helpful for you. You can also check out my partner Seeking Alpha Premium, link in the description below. Myself and many other analysts write analysis articles in analyzing stocks. I'll see you in the next video. Thank you.